Hi everyone, welcome to another episode of Ask a Property Manager. This is episode number 73 and today is June 2nd, 2021. We're coming to you from Studio 2.0 here at Own Buffalo. I'm Andrew Schultz, principal broker of Own Buffalo Inc. And on today's show, we're going to be talking about converting hotels to residential, what to do when a tenant wants to exchange work for rent. We'll take a look at some questions from housing providers around the country, and so much more. But before we jump into all that, we're going to go ahead and plug our social media. New episodes of Ask a Property Manager drop every Wednesday, 10 a.m. Eastern, live on Facebook. You can catch the replay on Facebook as well as on YouTube the same day. And don't forget to check out our Instagram as well. A new episode of the Rent Prep for Landlords podcast drops tomorrow as well. This week we're taking a look at different methods used to sign leases, tips for living in the same rental as your tenants, and whether or not providing appliances is a requirement or is an option. And it's really kind of a market dependent thing. So don't miss out on that. That episode of the Rent Prep for Landlords podcast drops tomorrow on Thursday and every other Thursday, everywhere podcasts are heard or over at rentprep.com/podcast. So we got quite a bit we're going to cover today. I'm going to jump over to desktop here. The first thing I want to mention is that Ewrap is open. So if you were a New York State landlord or a New York State tenant and you were looking for emergency rental assistance, the Ewrap website is open as of yesterday. You can go right online and hit the Ewrap button. I know we had some issues yesterday trying to get on and take care of the application process. It's a little bit more complicated than what the state made it seem. They are obviously super overloaded at the moment, so you may or may not be able to get logged in right away to do your application, but definitely don't delay. Get on this as soon as you can. These funds are limited. I know in the first 30 days there are certain groups that are prioritized over other groups, so make sure that if you're in one of those priority groups that you get in that first 30 days for consideration, because that's going to increase your chances of being awarded those funds. So that's something to keep in mind. Ewrap is now open. I did want to mention that right at the top of the show here. Next, we're going to jump into some news from around the country, starting with this article from NBC News. It's a red-hot real estate market, so why are home sales plunging? This one was published on May 22nd by Martha White. The number of existing home sales plunged in April, surprising economists who had expected last month's drop to moderate. Real estate experts say this is an indication that shortages of everything from lumber to kitchen appliances are reverberating throughout an already hot market. Good news for sellers, but a situation that threatens to price out a growing number of buyers despite mortgage rates that remain near historic lows. Existing home sales fell from an annualized 6.01 million to 5.85 million, the National Association of Realtors said on Friday. The consensus had been for a tiny uptick to 6.02 million. The plunge can be attributed to lack of inventory, said Nick Bailey, Chief Customer Officer at RE/MAX. It's a perfect storm for homebuyers. Builders are contending with widespread and unprecedented supply chain choke points, just as the swelling population of millennials is seeking to transition into larger homes to accommodate families. It's the millennial population driving this market, he said. A lot of them are turning to new construction, but because of labor and supply costs, builders are being very deliberate about how quickly or how slowly they bring things into the market. The lumber shortage has been well documented, but there are a host of other supply chain choke points plaguing home builders, from copper for wiring to PVC pipe, even for often taken for granted inputs like kitchen appliances. This combination of factors means that last year's sharp escalation of home prices is set to continue. According to NAR, the median sales price on an existing single-family home hit a record of $334,500 in March. We have a major housing shortage in America, said Lawrence Yun, the trade group's chief economist. The problem predated the arrival of COVID-19, he said, and was greatly exacerbated by a sudden influx of buyers seeking more space while locked down in the early months of the pandemic and a shutdown of construction sites, factories, and lumber mills. Supply chain issues have added several weeks to the time it takes to build a home, said John Burns, CEO of John Burns Real Estate Consulting. Big builders bid up prices on items they need for construction and then pass these costs along, and then some, to the buyers who are in little position to negotiate given the dearth of available supply, while small builders are often locked out entirely, Burns said. Suppliers have to take care of their largest customer first. The surge in demand that is allowing builders to push price and pushing even more strain on the supply chain as the demand for materials has surged. Even with much of the American economy returning to normal, those after effects will continue to have a long tail. Experts predicted. Commerce Department data released earlier this week found that the number of housing starts unexpectedly tumbled to an annualized 1.57 million compared with expectations of about 1.7 million. We've seen a continuation of appreciation in most markets, Bailey said. Too many buyers chasing after too few properties is triggering bidding wars, and in some neighborhoods, competition is so fierce that many homes are sold before they even hit the market, he said. According to Zillow, nearly half of the people who sold homes last month accepted an offer within a week. As millennials age into the peak years of home ownership, we expect that the demand for housing will be very strong in the coming years, said Chris Glynn, Zillow's principal economist. While low interest rates are contributing to the continued appreciation, even that can't always make a mortgage a financial reality for buyers. The challenge interest rates can't solve is the one barrier to entry, down payments, he said. Prices rising definitely heads to the challenge of coming up with that down payment. Programs that let buyers put down less than the traditional 20% can help, but in some markets, he said, would-be buyers find that this puts the cost of a monthly mortgage payment out of reach. Given the housing shortage and strong demand, there's nothing to suggest home prices will be falling, Yoon said. Yoon suggested that President Joe Biden's infrastructure plan should incorporate initiatives aimed at getting buyers into homes. It's not a good outcome for the country, Yoon said. We want to make sure that people who are making financially responsible decisions should have access to home ownership. We need to build more and more consistently so home prices come down. So I wanted to just bring this article to everybody's attention. It's pretty much on par with a lot of the stuff that we've been talking about over the course of time here when it comes to supply chain interruption, driving, being one of the drivers, not necessarily the only driver, but one of the drivers increasing the cost of homes. You have, millennials surging into the market. You have supply chain interruptions everywhere. You have builders who are taking the biggest chunk of the building materials right off the top. I just checked the lumber prices. Lumber prices update on Mondays typically. I just checked the lumber prices, and a 2x4, an 8-foot long 2x4, not even pressure treated, in Western New York in our local Home Depot is over $9 now. I mean, compared that to last year or the year before, you were talking $2, $3. So it's definitely a very real situation when people talk about there being a major issue when it comes to getting a hold of building materials to complete projects. Actually, it's funny because I find that most people now are re-examining whether or not they really, really want to do their project simply because the cost has grown so much. So I'm kind of curious if anybody that's watching has taken a home project and either delayed it or changed the scope of it simply based on the fact that it was going to be more expensive than what you thought when it came time to actually do that project. So let us know down in the comments if you've changed your plans for home renovation based on the current state of everything. We're going to jump over to this article. This is actually an interesting one. I don't have a ton of information on this yet, but I'll be interested to watch as this progresses. A VA-like housing bill proposed for first responders and teachers. This one published by Housing Wire on May 25th. New legislation would extend a benefit similar to the Veterans Affairs loans to first responders and teachers who buy homes. U.S. Representatives John Rutherford, Al Lawson, John Katko, and Bodie Watson-Coleman introduced the bill dubbed the Homes for Every Local Protector, Educator, and Responder Act, that's a mouthful, on May 13th. The bill would allow for borrowers to finance up to 100% of the acquisition price. Mortgages would be subject to FHA loan limits. Homeowners would pay an upfront mortgage insurance premium of 3.6% of the principal, which could be financed, and would not pay a monthly insurance premium. If passed, the new program would be administered by the FHA. The benefit is modeled widely on the widely used home loan program for veterans, which is administered by the Department of Veterans Affairs, the VA. Police officers, prison guards, firefighters, paramedics, emergency technicians, and public or private school teachers would all be eligible for the program. But before borrowers rush to take a job as a summer school teacher to get a break on a mortgage, the bill has a caveat. Eligible borrowers must have worked in the field for at least 4 years. They must also be in good standing at their current job, not subject to any disciplinary action, and they must also show that they intend to keep working in the same job for another year. Like VA loans, which are popular with investors but not home sellers, the benefit would allow the borrower to skip the down payment altogether. Samuel Royer, the national director for the Heroes First Home Loans at Churchill Mortgage and a veteran, came up with the idea for the program to acknowledge first responders' sacrifices, he said. I believe that American first responders deserve the same access to affordable housing benefits that I have as a veteran. The bill looks to ease access to home ownership by lowering the upfront cost of borrowers. The anemic housing inventory, however, still poses a problem for any potential home buyers who aren't prepared to pay well over asking price. Home sellers who now have many offers to choose from are not likely to look favorably on anything that entails more complicated financing. Loan officers, too, sometimes has reservations about government-financed loans. So this is an interesting idea. It's an interesting program that I would love to see come up and get off the ground. I'm very big on that kind of a thing, supporting the first responders, teachers, and things of that nature. The question with a program like this is, where do you cut it off? Because we'll highlight here, some of the groups that they say are eligible. I see that nurses aren't on here. I could see where there'll be a lot of concerns about that. Dispatchers, for instance, aren't on here. So where do you cut these programs off? That always becomes a big question mark. And then the other thing that I wanted to highlight is that at the end of the day, we're still dealing with a housing shortage. So even if you were to get this program up and running, the number of people who are going to be able to take advantage of it will be limited simply because of the limited housing availability. And the fact that somebody who's buying a property in cash is automatically going to be top dog offer over anybody who's financing for the most part. Though we did just have a financed offer beat a cash offer on one of our properties that we put a bid in on, which was interesting. Basically, what you're going to find is when people come in and they have this program and it's a $0 down program and they're coming in over asking price, there's going to be appraisal concerns, essentially. And I think that this program is going to be one of those situations where, given the inflated values that we're seeing in the marketplace right now, if there are appraisal issues and you're coming in on a 0% down program, it's going to make your offer not as appealing as somebody who's maybe putting down 20% on their conventional mortgage and has a little bit more room there if there is an appraisal issue to kind of make a decision as to what's going to happen next, price adjustment or what have you. So I think this is a great idea. I certainly want to see this progress, and I hope that it certainly does progress. But that being said, I think that this program has a lot of hurdles to get over before it can be considered a true success. On to the next article. This is actually an interesting one, and I wanted to bring this up less because it's news, but more because it's a different tactic if you're looking for an opportunity in the real estate space that is maybe non-traditional. Maybe you're looking to diversify or something along those lines. What we're seeing is hotel conversions into either mixed use or residential or senior living or whatever the case may be. And that's kind of what this article talks about. This is out of Multi-Housing News. This was written by Gail Kalinowski. I hope I pronounced that right. We're going to go ahead and jump right in. Orlando area conversion joins growing trend. Champions World Resort, a 435-key hotel and conference center in Kissimmee, Florida, will become a 352 micro-unit market-rate apartment complex as part of a nearly $14 million redevelopment, one of many hotel-to-housing conversions that are becoming a trend across the U.S. Interior demolition began this month at the site, a main commercial thoroughfare in Kissimmee, located near Walt Disney World and also Universal Studios in Orlando, Florida. Miami-based ICM Development, led by Carlos Balzola, yeah, I think I got that right, is developing the project dubbed Champions Village, and BCC Construction, a division of Prospect Real Estate Development Group, headquartered in I'm not even going to try to pronounce that, in Florida, is the general contractor. Construction is expected to take about 12 months, with the first tenants moving in late spring 2022. The redevelopment plan calls for 233 studio and 119 one-bed micro-units to be developed. According to Richard Zahn, chairman of BCC and Predge, Zahn has completed multiple hotel to apartment and apartment to condo conversions in more than 2 decades in construction and development. The company was also part of a recent $40 million conversion of the former 555-room Red Lion Hotel. The ICM joined a joint venture with Cornerstone Property and T2 Capital Management to buy and redevelop the former hotel into a 339-unit workforce housing property with 28,000 square foot of retail space. Construction began early last year and is expected to be completed shortly. Zahn describes Champions Village redevelopment as workforce housing. The completed project is projected to fill a void for workers at Disney and other resorts in the Orlando-Kissimmee market that are priced out of other types of housing in the area. Growing trend. The hospitality industry and cities and resort areas across the country had taken a big hit with the COVID-19 crisis, but these kind of properties can be put to good use. According to Zahn, this trend could be taking hold anywhere there's a need for conveniently located quality rental properties that working people can afford. Interest in conversions has grown in the U.S. during the pandemic. According to a JLL report on hotel conversions, recent activity suggests that the total market value of hotels sold for conversion over the next 5 years will range between 25 and 30 billion. Repurposing projects include converting hotels, often extended stay properties that already have bathrooms and kitchenettes, into multifamily, student, or senior housing. Marianne Barnett, a senior managing director for affordable multifamily practice at BBG, a national valuation and property assessment firm, told Multifamily News the number of conversion deals the number of conversion deals the practice has worked with has grown during the pandemic. The firm has worked on 4 hotel conversions in Phoenix, 2 in Charlotte, and 2 in California in Salinas and San Bernardino. She expects to see more of the conversion trend, citing the difficulties experienced by hotel operators in 2020 and increased interest in addressing the affordable housing shortage as drivers. Some are being converted to single-room occupancy housing to address either the homeless transitional housing need, or providing studio units that are more affordable on a monthly basis to individual renters, while some are being converted into more traditional apartment uses by combining hotel units to create 1, 2, 3 bedroom units, or by converting extended stay hotel units directly into apartments where the kitchens are already installed. In addition, some of the hotels are converted into senior housing, as the design translates easily from typical mid-rise hotel to senior housing with elevators and common areas on the first floor. From a financing standpoint, it may seem more sense to convert a hotel to housing because of the rising cost of construction and land prices. If a developer enters into a land use agreement, low-income housing tax credits may be available to help fund some, if not all, of the conversion costs. It can also be easier to convert older hotel stock to circumvent some of the zoning, entitlement, and NIMBYism issues that come with new development in certain markets like Austin and Portland, she added. So this is a very interesting article to me. And there were a couple things that I highlighted. Number one being that there are multiple uses for a hotel. You know, you think about a hotel and the way traditional hotels are designed, you might not think about the fact that this can be converted to studio apartments very, very quickly. Or if you have something like an extended stay, it can be converted to 1 or 2 bedroom apartments very easily. I'm going to go ahead and see if I can get logged into Google Maps here. See if I can zoom in. Here in Amherst, there were a couple of conversions that took place or are taking place, and bear with me as I zoom in here, around the University at Buffalo campus. Convert to satellite view here, and Sweet Home Road. So this project here was actually slated to be a hotel, and the project fell apart for a variety of reasons. This is now starting to see some light again as a residential apartment building. They're basically taking the shell of the building that existed for the hotel and taking that basic building blueprint or envelope, if you will, and converting it over to a multifamily building as opposed to using it as a hotel simply because the draw wasn't there for the hotel. Then down here on Maple Road as well, there we go. This Avia Lofts at Maple Road. This actually used to be an extended stay hotel. I don't remember what brand it was under, but this is now a loft conversion. And this is another one. Again, they did it because of the proximity to the University at Buffalo campus. You're basically right next door. It's very easy to get from one to the other. So this made a lot of sense for them to convert this from lofts over to, from extended stay residential hotel over to lofts. Another place that I think we might see some of that action is right here at the Buffalo Marriott, the Buffalo Niagara Marriott, This hotel it's been on the market. It went to auction once and it did not receive enough bids to meet the reserve, unfortunately. But this is another building where I could see some sort of a conversion, possibly from hotels into a longer-term residential type situation. So it'll be interesting to see how that progresses. I'm curious to see how much more of this we see here in the Buffalo market. I could definitely see that this would be an interesting thing to do in Orlando, simply because there's so much need for everything down there. You have to have housing for workers. You have to have a variety of different resort options for people who are vacationing. I do think that the vacationing is going to come back very quickly, especially given the fact that a lot of people were stuck at home for so long. A lot of people didn't spend that vacation money, so they're going to be looking to get out and get to a theme park soon. So I think that Orlando will turn around pretty quickly when it comes to the slowdown that's occurred there. At least that's my opinion. I'm not in the Orlando market. I could be completely wrong, but that's where I'm coming from on that one. Let's take a look at a little bit of funny business here. I think Rob Giuseppe over at Pillar to Post posted this one up on his Facebook, and I could not pass up sharing that one. I got a real good chuckle out of that. And then this one kind of ties back to our earlier discussion about the cost of building materials. I think I may have actually posted this one once before on the show, but I just love it. Every time I see that one, it makes me chuckle. So let's go ahead and jump into our questions from housing providers around the country here. We're going to start with this one on rent reduction and tenant maintenance. I just purchased a property and the tenant is month to month. They want to stay but asked to lower the rent by $50. The tenant said if we provide the mower and weed eater, that they will keep the property maintained. Mowing quotes are coming in at $30 every 2 weeks. Would you accept this, yes or no? Absolutely not. We don't allow tenants to do work for us because it creates a potential liability, and it's simply not worth putting yourself at risk. With something like lawns, if it's a single family residence, the tenant's responsible for maintaining their own lawn and handling their own snow. But again, they're required to purchase their own lawnmower to reduce that liability. I don't want a tenant sticking their fingers under our lawnmower and cutting their fingertips off. That's not a good spot to be in. So in that instance, the tenant's responsible for their own lawn and for their own lawn equipment. When it's a situation like that, we also give the tenant the option of engaging with our lawn service that we use on our multifamily properties. And that's actually a small profit center for us. So that's something to consider if you have if you have multiple properties. You might want to arrange for a lawn service and offer it to the tenants as a value add or something along those lines. If it's a multifamily property, we by default handle the lawns on those. We go out and make sure the lawn cuts are done. We have a service in place that handles all that for us. So again, we don't have to have a tenant doing that work on our behalf. Also keep in mind that if you allow a tenant to do work for you, they may not keep that lawn to the same standard that you would or that a lawn service would, and now you have to deal with that as a potential issue. So there's so many issues in this where it comes to creating an ad hoc employment situation versus, is this person a 1099 technically? Okay, now they need general liability insurance. It's not worth the headache. If you are in a situation such as this, my recommendation would be thank the tenant, but say no. As for the, and by the way, all of this needs to be specified in your lease as to who's responsible for the lawns and things of that nature. This is not something that should just be a handshake agreement. This is something that needs to be spelled out in your lease agreement. As for the rent reduction, I would decline that as well. This sounds like a situation to me where you just purchased the building and the tenants are kind of pushing to see what they can and can't do with you being the owner. And I think that your best move here is to put your foot down right away, put a stop to it and say, no, the rent is the rent. The lease terms are the lease terms. You are month to month. If you'd like to go somewhere else, you're more than welcome to, but we're not going to be making any changes to your rental agreement. Set that bar now so that the tenants know, okay, the buck stops here. We're not going to be able to push this line. But that's really what it sounds like to me is happening here. I definitely would not allow the tenant to do work on the property on your behalf. That's just asking for a heap of headache. Adverse action letters. Does anyone have a professionally worded document that they use when telling an applicant that we are not moving forward with their application due to the felony charges that involve assault with a dangerous weapon? The potential tenant told me they had a felony DUI, which we were viewing while we were viewing our townhome, but they failed to mention any of the other felonies that he has on his record. And when we did the criminal background check, when you Google this individual's name, it does not have favorable information that pops up. Honestly, it makes me a little nervous to say we don't want you as a renter. So the first thing I would caution you on is make sure you're actually doing a proper criminal background check and not just doing a Google search for somebody's name, because there are a lot of things that could be tied to just a name that it might not even be the same person. For instance, my name's Andrew Schultz. There are 2 Andrew Schultzes here in Western New York that I know of anyway. And no, we're not related. We do live in the same area, but no, we're completely unrelated, and I've never met the other Andrew Schultz. But it's very possible that if you were to do a Google search, there might be something that pops up for me or for him, and it's very easy to get those wires crossed. So for that perspective, I would say make sure you're doing a proper credit and background check. My recommendation would be reach out to Rent Prep for that purpose. They personally reach out to Rent Prep, talk to them. They know what they're doing when it comes to the credit and background check game, and that's really where you need to be. Send a generic adverse action letter is the way to handle the situation. Some states will specify that you have to give a reason. If you don't have to specify a reason, don't specify one. If you do have to specify a reason, put it something simple. State that the information provided on the application didn't match with the information obtained on the credit and criminal background checks. And also keep in mind that if you pull a criminal credit check, you are legally required to send an adverse action letter if you decline that applicant based on what's in their credit report. You're legally required to send an adverse action letter. I'm not going to go into all the ins and outs of having written rental criteria, but make sure that you do and make sure that you're following them every single time. One thing I will mention is that HUD has guidelines out on criminal background, and if you have a blanket no criminal background policy, it's time to revisit that, because what you are doing is creating a possible disparate impact, which could open you up to some HUD guideline violations. So my recommendation would be take a look at your written criteria and follow those criteria every single time. I am going to pull up our generic adverse action letter here just so you guys can take a quick look at what we use. And it's very, very basic. It just has our contact info at the top, the address of the person it's being sent to. Thank you for your recent application. After reviewing the information, we're unable to accept your application at this time. If checked, this decision was made in whole or in part on the information provided to us in a consumer report or investigative consumer report prepared for us by a consumer reporting agency. Their address and phone number are below. They make no decision in part, blah, blah, blah. You have a right to a free copy of your report within 60 days, etc., etc. This is actually provided to me by Rent Prep. Fidelis is the parent company. This was provided to me by them when we set up our account with them, and this is the adverse action letter that we use here in the state of New York to deny an applicant that we've chosen not to move forward with. It's very basic. It's pretty generic. It doesn't open you up to a lot of dialogue, which is nice, and it gives the tenant the option of going to get their credit and background check. They're entitled to a copy of that, but they have to go to the screening agency to get it, not to us. It has to come through the agency that issued it. And that's actually something it's good for you, because number one, it gives the screening agency the chance to review it. And then if there is issues with it, or the tenant finds information on the report that's not accurate, then the screening agency can deal with that and you don't have to. So that's something that's worth considering as well. Last but not least, tenant not maintaining lawn. I'm a new landlord and need some advice. The tenants are not maintaining landscaping on the property. The lease states that the tenant is responsible for lawn care. Any advice on how to handle this? So this kind of ties in with question one that we answered. And this is going to vary somewhat depending on your state laws. Different states have different laws on how you have to go about issuing notices to cure. Check your state laws, make sure that you're in compliance before you move forward. You did mention here that the lease states the tenant is responsible for lawn care. Check your lease, make sure that the tenant is responsible. That would be step one in this whole thing. Step two would be contact the tenant and ask them what's going on. Maybe they're sick. Maybe they broke a leg and can't get out to mow the lawn or something like that. You never know. Just reach out to the tenant first and say, hey, what's going on? You know, I see that the lawn is getting long. What's going on? If they don't respond to you, then send whatever notice to cure is required in your state with a firm date that the job needs to be done. Specify in the letter the date, and also specify in the letter that if the job is not done by that date, that you'll be taking care of it and billing it back to the tenant. Then wait to see what happens. Either the tenant's going to comply and take care of the lawn, or they're not going to comply and you're going to wind up having to cut that lawn, and then just back bill it to the tenant. Add it to their ledger and they become responsible with it with their following month's lease. So those are two good lease clauses that you should definitely double check to make sure that you have in your lease. Number one, specification on who's responsible for lawn and snow if you're in a cold weather climate. And number two, check to make sure that you have some sort of a clause allowing you to back bill tenant caused damages to the tenant during the course of their tenancy, and after the tenant leaves if there's damages from their residency, from their tenancy. So that's my recommendation. You've got a couple of, it's pretty straightforward here. It may be something very simple, or it may be something where you have to get involved, but it all boils down to communication first and foremost. And that's where we're going to wind up on today's show. Thank you all so much for watching. We truly do appreciate it. We love producing Ask a Property Manager, and you can definitely help us to improve. Do us a favor and drop a question in the comments, either here on Facebook or over on YouTube, and your question may be answered in an upcoming episode. If we enjoyed this content, or if we brought some value to your day, do us a favor and hit the thumbs up button. YouTube and Facebook both push videos based on community feedback, so every like, comment, subscribe, and share helps us to grow and reach more people. We'll be back next week on June 9th. That's next Wednesday at 10 a.m. Eastern with another show you won't want to miss. Thank you all so much for watching, and we'll see you next week.